Last week we looked at the 10 Canadian stocks I would buy to diversify my portfolio if I could only have 10 different stocks in it. As I was filming that video, it dawned on me that I wanted to see how that would look if I were only able to choose from American stocks. That is a very interesting question, and we will begin to answer it right now. For these stocks, we are going to stick to companies based within the United States. We're going to build this small portfolio with as much diversification as we can, with a strong emphasis on being as recession-proof as we can get it. We are also trying to find stocks with some amount of both passive income and growth. However, maybe one or two of these stocks will fall a little bit short on the passive income side. I am going to use the same sectors as I used for Canada, and you will want to stick around to the end of the video to find out exactly why that is. Also, I heard there is a chance to win some money, so you definitely want to watch the whole video for that. Like last week and the Canadian stocks, we will present these in the same order. If you missed that video, I will link it below, as you will want to watch that one too, especially once you see what I'm setting up later in this video. If you are in Canada and you want to invest in any of these stocks after consulting with your financial advisor, please check out Wealthsimple Plus, as they are the best way in Canada to trade American stocks commission-free. You will also get 2 free stocks for signing up with my link in the first comment. Full disclosure, I also get 1 free share, so it's a win-win for both of us. So without any further ado, let's start with our first pick. For our first stock, we will start off in the resources sector. The United States has a lot of interesting players in this sector, and as tempting as it is to stick with gold, I decided to instead go with an aluminum play. So for my first stock, I am looking at Alcoa Corporation with a ticker of AA. They are an aluminum giant. When it comes to the aluminum supply chain, being the world's largest miner of bauxite and the biggest alumina refiner is set to have a very good year. One of my important considerations when making this list is beta, which is a reflection of a company's volatility in comparison to the market. Their beta is 2.30, which does mean they are much more volatile than the market, but their positioning within the sector makes up for that, hands down. They have a market cap of $11.3 billion, which is not too shabby. They also have a dividend yield of 0.655%, which is paid out quarterly in the amount of 10 cents USD per share. This is a little small, but I chose this company for their growth and not so much for the dividend. When we look at their growth, in the last year, their share rose from $38.96 to $61.04 for an ROI, return on investment, of 56.7%. And adding in the dividend, we get a total return of 57.36%. Holy banana bread, we are off to a stunning start. The banking sector in the US has been struggling lately, but that means some of the big ones are ripe for buying, as with interest rates rising, the big banks will come storming back. For my financial pick, I chose Bank of America with a ticker of BAC. Their beta came in at 1.39, which is slightly more volatile than the average. Bank of America is one of the largest financial companies on the planet, and they have a huge presence in the U.S. retail banking industry. They have an awesome market cap of $323 billion. They have a dividend yield of 2.243%, which is paid out quarterly in the amount of 21 cents USD per share. When we look at their growth, in the last year, their share fell from 41.34 to 37.45. That looks bad, but keep in mind, this is due to the entire market slump we're in. They did peak at $50.60 though. However, their current ROI is negative 1.10% for a total return of 1.14%. This will no doubt look like the weakest stock in this list today, but make no mistake, they will not look that way for long. Up next, we have my pick from the energy sector, and I chose Chevron Corporation with a ticker of CVX. Their beta is sitting at 1.14, and seeing that people need energy in a recession, you really can't get any more recession-proof than that. They are America's second largest oil company and a favorite of Warren Buffett. They produce 3.1 barrels of oil equivalent, including natural gas and liquids. They have a very nice market cap of $335 billion. They have a dividend yield of 3.328%, which is paid out quarterly in the amount of $1.42 USD per share. When we look at their growth in the last year, their share rose from $106.21 to $170.69 for an ROI of 60.7%. And adding in that dividend, we get a total return of 64%, which is more than a match for inflation. There were so many REITs to choose from, but one caught my eye and stands out as a good bet against a recession. Public storage could be an industry in demand when the proverbial crap hits the fan, as you have to store your stuff somewhere. So I chose public storage with a ticker of PSA. They have a beta of 0.27, which gives me even more confidence in this pick. In a nutshell, they own and operate more than 2,700 self-storage facilities within 39 of the 50 United States. They also have some equity within the European self-storage market. That's just icing on the cake. They have a market cap of $59.1 billion. They have a dividend yield of 2.375%, which is paid out quarterly in the amount of $2 American per share. When we look at their growth in the last year, their share rose from $269.55 to $336.88 for an ROI of 25%. And adding in the dividend, we get a total return of 27.4%, which is beyond good for a REIT. With the lack of a spot Bitcoin ETF, the only real way to get some crypto exposure in this portfolio is to invest in a company with a significant amount of Bitcoin on their balance sheet. MicroStrategies may be the first company you think of, but there is another, and it is more than just a Bitcoin proxy. Thus, for this category, I have selected Tesla with a ticker of TSLA. Their beta is 2.08, which is high, but with Tesla's track record, I have no concerns about it. Of course, we all know about Tesla and how they are dominating the EV space. With Elon Musk and an unstoppable momentum, how can Tesla not be in this list? They have a massive market cap of $896 billion. They do not have a dividend, but their growth will more than likely make up for that. When we look at their growth, in the last year, their share rose from $559.65 to $865.65 for an ROI of 54.7%. And considering they peaked at $1,243, there's a lot of firecracker potential within this one. We also have a stock split on the table this year. This is a no-brainer stock as far as I am concerned. Tech has taken a hit lately, but despite that, there is one blue chip tech company that I really like for this category, and that is Microsoft with a ticker of MSFT. They have a wonderful beta score of 0.91. Once again, this is a company I really do not have to say much about, as you all know what they do and who they are. With that being said, their intended purchase of Activision Blizzard will strengthen their gaming revenue and will help them towards a very solid year. Also, in a recession, their cheaper computer options becomes more viable to a money-conscious consumer. That fact alone is how they edged Apple out in this category. They have an awesome market cap of $2 trillion. I think they're the only trillionaires I have in this list today. They have a dividend yield of 0.903%, which is paid out quarterly in the amount of 62 cents USD per share. When we look at their growth in the last year, their share rose from $238.07 to $274.73 for an ROI of 15.4%. And adding in the dividend, we get a total return of 16.3%, which is not bad considering the hit tech has taken over the last few months. For my transportation sector pick, it is a no-brainer when I selected Union Pacific Corporation with a ticker of UNP. They have a beta of 1.18, and as a key part of the American supply chain, there may be nothing more recession-proof. They are the third largest public railroad in North America with more than 30,000 miles of track. They haul a lot of coal, industrial products, intermodal containers, agriculture, chemicals, and automotive parts. In addition to that, they have access to Mexico. They have an awesome market cap of $144.18 billion. They have a dividend yield of 2.056%, which is paid out quarterly in the amount of $1.18 USD per share. When we look at their growth in the last year, their share rose from $221.90 to $229.59 for an ROI of 3.5%. And adding in the dividend, we get a total return of 5.6%, which is a little low. But the recent downturn in the market is making it look much worse than it really is with this company. And next we move to the healthcare sector, and I choose AbbVie with a ticker of ABBV. Their beta is 0.78, which is really fantastic. They are a pharmaceutical company with a good exposure to immunology as well as oncology. They have a market cap of $270 billion. They have a dividend yield of 3.69%, which is paid out quarterly in the amount of $1.41 USD per share. When we look at their growth in the last year, their share rose from $114.38 to $152.83 for an ROI of 33.6%. And adding in the dividend, we get a total return of 37.3%, which is not bad at all. We are now down to my two final spots, and for that pick, we're going to go to the communication sector, and I went with Alphabet Inc. with a ticker of GOOG. Their beta is 1.06, which is pretty close to average. Google has their hands in everything. Google and, of course, YouTube. So they're definitely a solid performer. They have a market cap of $724 billion. Now, they do not have a dividend, but we are hoping on their future growth to compensate for that. When we look at their growth in the last year, their share rose from $2,230.05 to $2,313.20 for an ROI of 17.4%. When we look at their growth in the last year, their share rose from $2,230.05 to $2,313.20 for an ROI of 17.4%. Keep in mind, they are down quite a bit right now in the current market slide. So that number is way, way, way misleading. So that is 9 companies from 9 different sectors to diversify this portfolio. For the final pick, it is my wildcard stock. And with the way the oil sector has been, I think this one should have a little oil exposure. I chose MV Oil Trust Units of Beneficial Interests with a ticker of MVO. Their beta is 1.12, which is a little above the average, but really not by much. They are an oil trust with investments within MV Partners LLC, who has net interest in oil and gas properties. They have a market cap of $126 million, so they are coming in a little bit low, so this is probably one I will keep my eyes on. However, they do have a dividend yield of 15.511%, which is paid out quarterly in the amount of 42.5 cents American per share. When we look at their growth, in the last year, their share rose from $5.40 to $10.96 for an ROI of 103%. And adding in the dividend, we get a total return of 118.51%, which is way more than I could ask for in my wildcard pick. So that is our American stock team. So here is that bit I alluded to in the beginning of the video. I am planning to run the American and Canadian team against each other for 1 year, and we will see who comes out on top. We will have winners for each sector, as well as an overall winner and MVPs for each team, and all of that. I will provide an update monthly, so make sure you are subscribed to me for that. Speaking of contests, I am also going to give away $25 Canadian to one of you. All you have to do is comment on this video to be put into the draw, and the winner will be selected on Saturday, May 14th. I will then transfer the winning money over to your Wealthsimple Cash app. If you do not have that app, grab it below with my link in the top comment, and you will get $10 free just for signing up. And heck, you may even win that other $25 from me. Unfortunately, this one is only open to Canadians, but I do want to look into having a contest down the road that anyone, anywhere can partake in. So definitely good luck on this one, guys. I do need to point out that if you are thinking of investing in any of these stocks, just remember I am not a financial advisor and am only the beginning of your research. Your financial advisor is the end. If you guys loved this video, be excited. There is way more to come. Until then, why not watch one of these videos? And before you jump into that content, just be sure to like and subscribe to support the channel. I'll see you in the next video.